In the earlier lecture, I said that shares cannot be issued at discount, and if it should be issued at discount, it is only for sweat equity shares. So what is sweat equity shares? Sweat equity shares are those shares which are basically issued to either the employees of the company, okay, or they are issued to the directors of the company. So sweat equity shares are those shares which are either issued to the employees or directors of the companies at discount. So you issue them at discount, or it may be for consideration other than cash. I mean, you don't collect cash, but for some other reason you issue this security or this share. So what are the possible reasons where you issue share for consideration other than cash? Number one, probably that employee is contributing to the technical know-how of the business. Okay, so for the technical know-how you are making the consideration in the form of shares other than cash, or you are going to issue shares for the intellectual property of the employee or of the director, okay, or it may be for some other reason, but he is making value addition to the organization, so you are issuing shares for consideration other than cash. So understand, sweat equity shares are those shares which are issued to the employees or directors at discount or for consideration other than cash for items like technical know-how, intellectual property, or value additions. Section 54 of Companies Act 2013 lays out the conditions which have to be complied. Okay, so only if you comply with those conditions you can go for issue of sweat equity share. So what are those conditions? Number one, it says this issue of sweat equity share should be authorized by a special resolution of board of directors. Okay, so there should be a special resolution by board of directors, and in that special resolution how many shares have to be issued, that is number of shares, what is the current market price, okay, and what is the consideration, whether it is cash or is it for any other form, what is the consideration, and who are the class of employees who are eligible for this sweat equity shares. So everything should be mentioned in the special resolution and it should be authorized in that effect. So that is the requirement number one in section 54. Then there is a second requirement, that is, if a company is issuing sweat equity share, it should have lapsed a minimum of 1 year. That is, the age of the company should be at least 1 year. Okay, and if it is a listed company, okay, if the company is a listed company, then in addition to this section 54, they have to comply with the requirements of stock exchanges. So that is more important. Okay, now since they are getting the shares in a different way or for a lesser consideration, whether the rights of sweat equity shareholders are lesser or whether they are affected, answer is no. The rights of the sweat equity shareholders will rank pari passu with the rights of the other shareholders. I mean, they are also just like another shareholder.
Thanks for watching this video, and I hope you like this lecture. If you wish to learn more on the areas related to this topic, check our comprehensive course. I have shared the details and link in the description below. Click sign up and enroll. I'll see you inside the course.